Good morning, good afternoon, and good evening, no matter where you are in the world. Today is March 4th, Thursday, March 4th, 2021. It is nearly the end of the week of week number 9, and there's a couple things I want to do, but before we start, don't forget to hit the like, subscribe, and comment below if you want me to do a video on a particular topic. But for today, there's a couple things I want to talk about. Rocket is showing it is positive right now. Riot blockchain is down. What's interesting about this was blockchain was actually, when I looked at these two, these were up. Markets are relatively flat. If you look at the percentage, that's what I care about because things flip flop back and forth. So I don't really care about the size of move. The percentage is relatively flat. So anything can happen today. So there's a couple things I want to do. One is, do I need to manage any positions that are expiring tomorrow? And I do. I do have Rocket Cash's Curve puts that expire tomorrow. The other thing I have to do is I wanted to throw out a Tesla trade. I did it last week and I showed you how I made about 45 bucks for one day of risk. So today is Thursday, but normally I do my Tesla trades not at the morning. I like to see where the market settles in the afternoon before I throw on a trade. And then what I want to show you is even on a Friday, I can throw on the second piece of the trade. So I may start the Tesla trade today to show you how I do it. And then tomorrow I'll complete the other side of it. So basically what I'll probably end up doing is one half of an iron condor. I don't know which side I'm going to do first. I can do a put spread or a call spread. And then tomorrow, based on where it moves, I'll collect more premium and I'll adjust the risk based on what happens in the morning. So I'll demo that, and then this way you can see how I'm teaching it. Before we go into the trading, just want to remind you, you can always find me here in these investment group. This is an Investing 102 group. You can find me there. Or you can find me on Facebook at Solving Chaos. That's where I do post some other stuff in there. You can see what else I'm doing from a business point of view. So let's get right to it. The first thing I did was I went into my open Iron Condor spreadsheet, updated the market price of what it's trading at today, and you can see how most of my SPY Iron Condors are now being tested on the put side. But what you also will notice is it just means it's near the midpoint of my between the short put and the short call. And because I staggered my iron condors that way, it's fine. And I already closed this one, so you can't look at this one. But you see how these are all $30 away. This one is $25 away. This one's a smaller one. It's only 4, so I'm okay with that. And it's a little bit more time. Normally I close these around 22, 21, maybe 18 days. So these are, I keep an eye on it to see where it stays in the range. So we'll see what happens. We're going to manage it. First thing I want to do is try to manage this blockchain, Riot blockchain. You see Bitcoin is dropping, so I need to manage this. It's still the first half hour of the day, so there is some volatility in prices, but I'm okay with this. I need to move this out, and there you go. The trade went across. I'll show you real quick, and you can see that I just did that trade, and then actually I was able to squeeze in 2 Riot blockchain trades. So what I'm doing is these are cash secure puts. I'm using $5,000 in cash to play this trade. And for those of you who know, normally I don't do it on these, but I was following this from a $12 or $14 move, and I rode it all the way up to 70, and I made money on it. So now, because it's reversing, I'm just trying to unwind my position without losing all the gains that you made in the first 6 weeks of the year. So that's what I'm doing. I'm collecting a net credit still. If you can see that, I just rolled out 1 week and I rolled it down $1. In this case, I rolled this one down $1.50, but I'm collecting a net credit each time. And just to let you know, here's the net credit. I collected 69 cents on this one, and I collected 99 cents on this one. So between those two, I made $150. Plus, I reduced my cash buying power, right? I returned back $100 back to my pocket in this trade, and this one I returned $150 of cash back on this trade. On to the next move. Let's take a look at EA. I'm not sure what's going to happen here. It's down another dollar. It's 131. You see I have a call for 15. I can close it for $5. What I want to do is roll it, and I'll show you what I do. I don't want to roll it out. I actually want to close the gap. So if I reduce this here, let's see how far I have to roll down. So this is not worth it. You see this? I'm only collecting, if I'm losing 20 cents, basically I'm reducing the time frame. So I want to try to bring it even closer than April. I don't know, will this work? Yeah, this is not going to work. You see that? It does not make sense to do something like this. $1 away, that makes no sense to me. So what I may do is, let's stick to, you see, you need the one with the most choices. This doesn't have a lot of choices. Let me see if I can do something like this. Will this make choice? You see, there's some risk here, but I can still make money. If I can get this for, I'd like to see if I can get 5 cents for this credit. So I'm shortening it up, bringing it closer to the market. Techs are going downtrend. It may be worth it for me to bring this close to the market. For EA, I can always roll back out, so I'm not afraid of that. And EA has always been a great trade for me to roll out every time. So I'm gonna try that. Let me go and try to get the EA trade in there. So let's try to get the EA trade in. And what I wanted to do was I had a filter on my tracking spreadsheet, and you see I track my trades. So trade number 159 for the year, I made $90 or 87 on this one. And then in January, when EA was rolling up, I had to roll it up. And you can see over here, I made 141. So the only way for me to get this trade across is take some of the profit that I made in the past, in the last month, you see that January, February, and pay to sort of move this closer. Instead of waiting till June and not trade for like 4 months, I'd rather just move it closer so I can start trading again and collect more premium. So I'm willing to spend a little bit of my profit so I have that ability. Because this share is no longer 145. You see how I moved it up? And now I'm taking some of that profit and giving it back so I can start trading again. And what I mean by that is basically the 140, I can go all the way up to $1.40 here before I lose money on EA for this year. So because it's not costing me 140, it seemed like it may cost me 20. Oh, it was 20 before. So let's try to get it for 20. I mean, I don't want to give up all my gains for the year just to be able to do this move. But I want to move it closer so I can start collecting more premium in the future. So it'll only take 2 or 3 weeks for me to start playing this again, because you see I'm shortening it to an April time frame, and I'm lowering the price that's within $4 away. So let's see. I'll keep on doing this. And I played EA for multiple quarters and multiple years. It's definitely worth it for me to move it a little bit closer. And it just went across. You see that? It cost me $37. But I shortened the time frame so I can start trading again. EA, I like to do weeklies, so I'm going to keep an eye on it. But I think I feel good because if everything is going red, I need to start moving it closer to the marketplace because I can make some money on the downturn also, even doing something like this. The market is turning red, so I need to maybe adjust some of my other moves right now. So at this point, I want to try to fix some of my Rocket. Obviously, you guys see what's happening. Rocket is taking a big reversal and it's going down. And because I don't own the shares, I can still do different things. When you own shares, you're either left bag holding or you just take the loss. In this case, I am going to do something a little bit different. I'm going to try to keep on collecting a credit. So that means I'm collecting a premium. The only difference is I'm extending my option further into the future. Remember, there's always a time value. And I think you see that. One of them just went across. So my Rocket went across. I collected a more premium. So there's some advantages to never owning the shares. And here, they didn't go for 91. I don't know what the right price is. So I'm just going to guess by just randomly lowering it until I get closer to the mid. and we'll hopefully see if it gets rid of it. But I am pushing this into the future because I don't have time to sit there and watch this trade all day or all week. So there you go. I got it. And I'll show you real quick what happened. I'll show you the so the rocket trade. I made money on Monday, Tuesday, and then obviously I moved it a little bit too close. But in my video, you heard me say I was willing to take the risk, and I explained why. I told you that I had a way to roll out, and I did. That's exactly what I did. I rolled it out into the future. This one, I only moved it 1 week, and I moved it down 50 cents, and I collected a premium. This one, I moved it much more than a month, and I moved it down $2, and I collected a premium. So that's what I'm doing. So let's put on a Tesla trade. I want to show you how, even if you don't know what you're doing, you can still put on a trade. You can still manage the risk. I want to do something for literally expires tomorrow. So it's 1.5 days of risk. It's Thursday and Friday. The go is you're going to make some money on the time decay. The first thing I'm going to do is type in the ticker up here. I'm going to put in Tesla. I want to see what the odds are and the probability. I'm going to do something dated that expires on Friday. You can see that it ends in 1 day. You see 1 day to expiration. You can see what the odds are. I'm going to, because it's down right now, I'm probably going to do a put. And you see the odds are so low on these deltas. I want to see, is it really worth it to do something like this? I don't know how much I'm going to get. I'm just going to play around with it. But we'll pick something in the single digit odds of happening. So you can see anywhere under 600. 600 is right at 14% because it can drop $40. If you want to go safer, you probably want to be in the 550 range, 560 range. So let's just start at 580. I'm going to test it out and see what it shows me. So at the 560 range, you can see what's happening. If I do a $10 whiff, that's all you have, you can do, that doesn't make sense for me to do. Well, it may make sense. Let me just think about this real quick. I want to see what the odds are. So the odds are the same, but I want to see what the premium is. For every $10, well, so that's not going to be worth it. I'm trying to do the math. What I gain is for every $1,000 buying power, if I'm not doubling it, then it's not worth it. I'd rather just write 2 contracts. So I think that's the strategy here. It would be worth it. It was less if I was making more. So I think what I'm going to do is something like this. It is down 10. The odds haven't changed. 5.6. Did I say 560? 560 is here. It's a 1% chance of happening. You're not making, remember, this is not a money maker, as in huge money. This is something that I'm playing because I think I can manage the risk in 1 day. Okay? So if you're willing to do this, do you understand why some people then play both sides? Because what I mean by that is this. I'll show you real quick. So by adding 2 other legs, I can now do a call, and then you change this into an iron condor. So what you would do is, suppose Tesla's going to pop up to over 700. You may do something like this. It's the opposite. And you'll let this thing, did I do that right? Oh, I'm sorry. I did the wrong numbers. This one should be the higher number, and this one should be the lower number. And you see, I went so far out that there's really no profit to be made because I am picking something that's $100 away. So you would need to go just a little bit lower. So you have to test it out and do something like to the point where you're adding premium. So now I'm saying for this iron condor, I'm going to play for 1 day of risk, and I'm willing to risk in the 720. So let's see where the 720 lies in the odds. 720 as of today is a 5% chance of happening, even on the upside. Or if you care about the deltas, it's a 5 delta. And why would you play something like this? If you do 2 contracts, you can see now this becomes maybe you can collect 55. It's $100. You hold it for a day and then you sell it tomorrow. If it stays between the range of 560 and 720, you're fine. Again, you don't have to wait for the expiration. You sell it early. So it's a good way to make money based on time decay. So for something like this, I'll show you what happens if you do, we'll execute the trade on Tesla. And it is a big red day. I just want to make sure I pad it so that if this thing drops further today, drops 2%, I think you want to be in a good position. The market look like it is turning though. You see, it almost wants to go back up. So what I want to do then is, and I'll show you why I originally intended not to do an iron condor. If it wants to go back up, I can throw that on tomorrow. So for today, I'll just do the put side, and then tomorrow we will do the rest of the legs. By doing that, you have some flexibility in how to play this tomorrow. So let's do that. I'm happy with, remember, my goal is to make an extra 20, 30 bucks at the end of the week. Since I have cash sitting in my account, I'm happy with that. So I have cash sitting in my account. I'm happy with trying to make an extra 30 or 40 bucks. So that's what I'm doing in this trade. Again, I'm not trying to show you how to make big money. I'm just showing you with dead cash in my account that's doing nothing. Remember, cash is probably earning me 4 cents a week. By doing one trade with the cash, you can try to make some money on it. As you can see, the Tesla trade went across. I'm not going to make a lot, but it is what it is. It's the difference between these two is 20 cents, not a lot. Minus commission, 34, 35, 36 bucks. And that summarizes my trade for today. Again, what I'm trying to help you guys with is it possible for you to make a little bit of money with very little risk? It is possible. There's so many different ways to play the market. You don't have to do the same strategies or other strategies that people are trying to convince you to do. Play what feels good to you, or a strategy that is comfortable based on your risk tolerance. I don't go for big winners. I do take some risks on some things like playing Rocket and playing Riot. There are risks there. But what I'm trying to do is I'm not trying to overcomplicate my strategy. I'm happy with making a little bit of money per trade. If it's $10, $20, $30, whatever it may be, I just want to make sure I minimize the losses and keep an eye on things that are moving against me. So I need to fix them before they're too late. So with that being said, please comment below. Let me see what you're doing. Tell me what trades or methods you like and what's working for you. And also share the things that are not working. I would like to hear why and try to understand why. With that being said, as always, I'm trying to help you win with money. Let's do this together. We can do this $1 at a time. If you do it 1,000,000 times, that's where your $1 million comes from. As always, have a profitable day. Bye-bye.